Hey guys, it's Simon with ToughTrader.com. Wanted to do a trade review for Friday. It's 10 o'clock in the evening on Sunday night. I'm really just kind of prepping myself for tomorrow, feeling pretty relaxed. Struggled a little bit the last 2 weeks, and so I just want to start the week solidly. So I wanted to review what worked on Friday, what we were looking for, and then also how we defended against or how we avoided getting run over at the end of the day. And I'm going to cover that right now, as a matter of fact. Before I get started, very importantly, if I can find it here, and it seems like I don't have it open, so I will open it right now. Don't you hate when you're not completely prepared? And let's do this. Have it up. And there we go. So past performance is not indicative of future results. We have to throw this up there, right? Trading futures is risky. You can lose a lot of money trading futures. So please have a trade plan, have a risk management plan. You can lose more than you put into your trading account. It's quite easy to do it. And it's really pretty shocking how fast you lose money. One of my main jobs as a trading coach, I'm going to diverge for just a second here because I can. One of my jobs is to help people out. And I have a guy who's in his first year of professional trading. And, we spoke on Wednesday, and he took a not a big drawdown, but he hit his max day loss on Wednesday and hit his max day loss on Thursday. And we spoke for a little bit on Thursday. And I said, look, you got to slow down your pace. You know what you're doing. But when the volatility gets extreme, right, his trading relies on very detailed entries with very tight stops, right? And it works if you know what you're doing. And he definitely knows what he's doing. But given the volatility and how far the VIX is above its lows, basically VIX is at 12 or higher. NQ can be quite a beast, right? And usually what you'll see professional traders do is pivot. When the volatility is low, they'll pivot to NQ, but when volatility is high, they'll pivot over to ES. And I said, look, you don't want to get yourself in a position where you do psychological damage to yourself or harm to yourself. And you don't want to get in a position where you draw down hard because it's just a pain, literally, figuratively, and emotionally. It is a pain to dig out of a hole. It really is. So I said, slow it down, cut your trade size a little bit, and get your rhythm back. And he did just that. He had a great day on Friday, right? And once he lifted the pressure off of trying to get all that size on and his maximum size, because he got into a little bit of, 2 difficult days, right? Once he backed it down, did he make up all the money he lost on Wednesday and Thursday? No, I don't think he did. But he had a very nice day. He covered some of the losses, and he walked out into the weekend with his confidence way up. Sometimes that's the job of a trading coach. And if you don't have that as in a relationship where you have a professional trading coach helping you, have that in a relationship with someone in your life who's familiar with your trading that can tell you, hey, breathe, slow down a little bit. You don't have to fix it all today. It's so much better than just burning yourself down while you're trading. That's my 2 cents about that. And I think that's one of the most valuable points of being a trading coach. So let's jump in. A couple of things that we'll notice right out of the gate. So I had a short bias coming into Friday. I did. It doesn't mean that I was going to short all day long, obviously. What it does mean is that I was looking for short location, and I thought that we could come down and test the open gap. And I thought we could actually come down and test Thursday and Wednesday's low. I was wrong about that, right? Still ended up having a pretty good day. So let me tell you how that laid out. Early in the morning, I was short. So we open up. This is right here. This is value area high. So what does that mean? Value area high is the top of the area where 70% of the time trading where 70% of the time spent trading was accomplished. That's between the area between value area low and value area high from any given day. So this is specifically from the prior day, from Thursday. That was Thursday's value area high. And it's generally an area where we are looking for rejection and a push back to the downside. And so when we first pushed into this location right here, this is where, and Globex high was actually considerably higher, if I recall correctly. I don't have it up there right now, but Globex high was higher. But I thought we would reject out of here. So think about that. And I did short out of here, and my target was to hit gap fill. I didn't quite get gap fill, but I had a very nice trade under my belt. So the first thing that I wanted to see is I wanted to see the ability for the market to roll down, and then I wanted to see that have the inability. I wanted to kind of tap the 72.22, and then I was looking for a push push away, and then I was looking for a relatively tight stop right in here where it did not close above 72.22. So my stop was originally about 4 points, and my entry was actually on this backside test right here, and I was looking for the push back into 27, approximately 27.14 to 27.12, but closer to the 27.12 for the majority of it. So it wasn't as big a trade as I wanted. But what I want to point out here is what I did is I took, let me get the right chart over here, because most people, when you start day trading, they are looking at, let me fix this up here real quick. Let's get over to ES. Go. Let's clean this chart up. Okay. So what I was looking for is this is the prior day's value area high. So what I'm doing is I'm using a higher time frame location, value area high. My next area that I wanted to have checked up upon was this 25 to 27 location. So first 23, then 25 to 27, and then we had a naked volume point of control at 27.33. This caused a lot of people a lot of pain on Friday, and I'll talk about it in just a moment. But this is the first area I was looking for. So if you go from here, and then we go over here, you'll see that specific area was what I was aiming for. I saw the initial rejection, the push back up, and that's where I got short this 27, roughly I think 27.21 or 27.20 against 27.24 or 27.25, somewhere in that location. I then obviously get the roll to the downside. The first time we come all the way back, I did not cover it because I really thought we were going to get gap fill. So I really got lucky the second time through because I held this trade all the way through, the rotation all the way back up. And then I finally got the roll all the way down into 27.13, almost to 27.12. I covered it down in this area, good chunk. And that was a good trade. That was a good trade out of the gate to start with, right? And I followed my process. Now, understand why I wasn't more bearish in here. The reason why I switched gears, and this is important, even though I thought that we would roll to the downside past the gap fill, whenever you get the market where you get close to the gap fill, but you can't reach it, so this right here, you get close to the gap fill, but you can't reach it, that is a warning sign. Not only that, but if you'll look, the internals, the advanced decliners were very, very strong, even once we roll to the downside. And if you'll look, we'll insert it here real quick, symbol, tick, plot. And even though tick is a little early to look at tick, what you'll see is, see how we pressed a new low here? We pressed a new low right here. Hold on one second, is that right? Yep, that's correct. We press a new low right in this location. I just put up these lines, obviously. We press a new low right in this location, and see how the tick is actually improving through here as we're pushing that new low? That was a sign to cover. And had I been thinking long on the day, it probably was a sign for me to get long in that area, but I was being kind of stubborn, waiting for this location. It never happened. I did take very nice scales. My trailers got stopped out up here somewhere, but I ended up doing very well on that initial trade. And what I would have wanted to improve, right? So there's always the question of what you did versus what you wanted to do that was perfect. And what I wish I had done and what I will do going forward in the future is I'll look at this trade, and I wish I had done two things. A, the first thing I wish I did was I wish I took the entire trade off at that point, because I'm a day trader. I was shown that we pushed down. We were able to push new lows without a larger tick, without tick getting more negative as we pushed into the lows. It was actually improving as we were pushing into the lows. And I should have known to cover that whole trade right there. And then what I would have wanted to do, this is my best last seller right here. And once we closed above my best last seller, which we did on this bar right here, I really wish I just flipped that trade and gone long. I should have figured it out. But again, you want to come in without a bias. But I was short biased on Friday. I'll just tell you right now, I was short biased, and I was actually going and saying, okay, if we do push back up, I'm going to look for a short out of 27.24 to 27.27 was the next area that I was looking for. And what you'll see there, so there's two things going on. Number one, the reason why this was a short was because this was a minor anomaly off of this chart. I'm going to try to keep this as brief as possible, but going back to this chart, this was this anomaly that was sitting right in here. There's an anomaly right there. And what I wanted to see it do is, when I have an anomaly, if you have a profile and you have an anomaly that looks like that inside the profile, what I want the market to do is I want it to actually trade above and then get back below that profile to show that the auction is complete, that we tested above, there wasn't enough interest above and then push lower. And once we push lower, I don't want it trading back above that swing high. That tells me that the trade is busted, which will lead us back to the 27.33 in just a moment. So let's go back to the other chart really quick, right? Because this is where we're piecing different components together as we trade through the day. So I get up into this 27.24, 27.27, but what you'll notice, and I told the members in the room in real time, I'm waiting to get underneath my last best buyer. So you'll notice as we're pushing up through here, see how I can't get underneath? Here, I'll point it out. See how we can't get underneath our last best buyer all the way through here. We just can't close below them till right here on this bar. And it was this bar right here. And I wanted the backside test to about the mid of this bar, which was 27.26. And that's where you'll see in the room. Here we'll scroll down past all the charts I've already posted for tomorrow. And you'll see that I put in here that. Let's go to my own. Twitter sometimes gets so. There we go. Difficult to use. So. There you go. So you'll see that the time frame here was at 9:30. So I think that's actually 11:30 my time. So that's California time, I'm pretty sure, with Twitter. So we're looking at right at 11:30, right at this location. So that's when I post. When we get this bar right here, that's when I post that I'm looking to short that 27.26. And I actually took 2 tries. There wasn't very much volume that went off on the first. We came in right to it right here the first time, and I couldn't get filled on my full size. I think only 45 or 50 contracts traded there the first time, but I was able to get the full size over here. And then you'll notice that we rolled down to the downside. Now I have a decision to make, and I goofed it for a second time in the day, so I know that I'll improve it tomorrow, but I want to show you all this. So from swing low to swing high, what I pointed out to the guys in the room was that we had, in order to make this trade work, we had to get behind the 62 retrace. And as you can see, we could get nowhere close, but where I goofed this was as we pushed into 27.2150. So we took scales all the way through. You'll see in the from the private Twitter feed for the members that you'll say that so you'll see where I got the fill to 27.26. And then you'll see that as we were pushing in, I was pointing out that there was 3 points. And then you had a maximum, I think, of 5 points on that trade, right? And the reason I'm posting that is because you should be scaling or taking profits as that's rolling down and then leaving trailers. But what I goofed on this was as we hit the low, again, we had tick divergence, and we were unable, forget the 62 retrace, we couldn't really make it to the 50 retrace for the day. And it showed strength. You can see that we were then able to get above this last swing high, which is definitely not what you wanted. And once we did this, it was really all over at that point. You could tell they were going to break it to a high. Now, I want to talk about this for just a split second. One of the guys that I really respect and is a fantastic trader is FT71. And he does his own ways, just like I come up with scenarios. He has his own scenarios too. And we pretty much had the same levels if you look at his trade plan from Friday. But what he said was, and I expected this exact same thing. He said, I expect to test into 27.33 and then failure and sales and sellers to push into the close. Now, I'll tell you what the problem is with that. And this happened to me when I was younger. FT71, like a lot of guys respect that guy. He's an awesome trader. He really knows what he's doing. Like there's nothing negative. I have nothing negative to say about the guy, right? He had a plan, right? And his plan was that if his setup came up, so understand, he doesn't follow his plan blindly. He goes and just like I do, he goes and looks for a setup through the course of the day. And then he wants to see certain pieces of price action to happen on very small time frames to confirm that entry or that exit. So what you'll notice here is even if 27.33, which you'll notice I had marked as a white line, and this should have been closer, but I had it marked as NVPOC, which for me in my book, if you find a naked volume point of control, which means it was a point of control from a prior trading day that was never tested, that is generally a super strong location to get rejection, either long or short, when you reach those areas, right? But notice, what were the qualities I was looking for here? I'm looking for a rejection out of an area, then a backside test. Key rejection underneath my last buyers, backside test. So over here, the reason why I didn't get in trouble here was because when we busted, there was never a single sign of rejection in that area, right? We busted. Everyone was caught short, was going to have to come in. And this is pure short squeeze right here. It was options expiration Friday, and clearly that move busted some pin that they were trying to take down on options, and they ran it straight through, right? So no, you don't get the apex of the turn necessarily when you wait for the first rejection. And actually what most people are scared of, and it falls under FOMO, right? So what they're scared of is they get the turn and then it rolls straight down without ever giving you the backside test. And I'll tell you what, that does happen. I've had a lot of painful situations where I've been waiting and waiting and waiting for a short. I'll get a short bar like this and I'll go, finally. And I'm usually looking, I didn't have a location here. So understand it's not just the process. I have to have location. So there was no reason for me too short here because I had nothing on my chart from a higher time frame, mainly the daily time frame, that told me that this was an area that we could reject from. So even though I got the pattern, right, I didn't have the, and even though I had the pattern for a short, intraday, I had nothing from a higher time frame to say, hey, Simon, this is where we should be shorting. So there was nothing for me to do. But I have had situations where I'm like, this is a key location from a larger time frame. I get this exact pattern. It closes. I try to get the backside test over here, and it misses, and then it just falls away for 10 or 20 points. I've had that happen before. And there's only two ways to fix that, right? The two ways to fix that are, let's pretend for a minute, because it's a good example. Let's pretend for a minute that this is the trade you wanted, right? And you were afraid of missing it. The only way to do that is to calculate what your RR is, how many times you get a bar that looks just like this, right? And then, so you're risking, if you short the bottom of this bar, let's just call it 27.38 for easy conversation, 27.44, 6 points, right? Well, that means you need to look at this chart below and go, hey, can I get a 6-point RR? And it's not just on that one trade, but over the course of all your trades, do you end up with a 1-to-1 risk reward or close to it or better? If you're a day trader, I think that's a very, very important component from where you're taking your trades, right? So for me, I've kind of put aside, I do get mad when I miss my trades, but not enough to start clicking like a wild man or trying to chase the trade or anything else. I've suffered enough battle scars and enough pain to go, if I just miss the trade, I just missed the trade. But then the other side goes is I get guys that are so concentrated on just looking for this intraday setup that they forget to go, oh, is there anything actually here on the chart? Is there any reason for me to be shorting? And let me tell you what the other clue here, that this is a really bad short, by the way. See how we got a new swing low on the tick? That was the afternoon low, really since 12 o'clock my time. That was the swing low. And note it, so a real easy litmus test for that is if you get a new afternoon low tick and you can't break your last swing low, that is a no bueno sign. You should be getting new low ticks and you should be breaking swings when that occurs. That's a sign that you have a really good trade on your hands. If you get the inverse, watch out. Shorts are about to get another round of whooping to the upside because the longs are about to come and pour a ton of cash back on that fire and burn it straight up, right? So let me sum up. So because I always like to do the what, the so what, and the now what. So the what is this. First of all, you have to have location from a higher time frame. But even if you have location from a higher time frame, like this right here, now you need the pattern. The pattern should look something similar to this over here, right? And then you have a controlled entry. You have a point from which you can take that trade, a point from which you can stop that trade, and now you can measure what your RR is. And there's a step in there that you want to follow if you're trading, right? If your entry is right here, it's 40, and your stop is at 44, let's add a point. Let's say it's 45. The first question you want to ask is, can you financially afford the stop, right? If you can't, don't take the trade. Right now, don't try to make this trade work with a 1-point stop. You'll just hand $50 to somebody. Don't do that, right? So first question is, can I afford the stop? And number two, are you sizing it correctly relative to the amount you can lose per trade, right? The next question is, if you can't, let's say your stop was 2 points. That's the most you can afford, and you needed 1 point to donate right behind it to make sure you survived. Well, then the way you handle that is you take this is your stop is right here. So let's call that 75. You subtract 2, and you go, excuse me, that's 45. And then you subtract 2. So that puts your entry at 43 against 42. That's what you do if you cannot afford the correct stop. What I see too many people doing is they'll short right here and they go, I can only give it 2 points. and then I get an algo, whoop them to the stops, and then watch it roll over. It's extremely frustrating. My suggestion is you don't do that. Instead, you find a way to, and there's techniques to do it, but you find a way to get that stop smaller or place the trade in the right location so that you can survive that stop. And that's all I have to say about that. So that was the trade. A lot of people really got hurt at the end of the day. Usually what you expect in a bear market is rally in the morning. The pattern, if you look at the whole week, we'll switch it a little bit higher. But if you look at the pattern, the other thing that set people up on Friday was look at the pattern all week long has been rally in the morning and roll down in the afternoon. You'll see that all the way through the week as we were rallying up, roll down, rally up, roll down. And you'll see that again at the beginning of the week, rally up, roll down. And I think people were looking for that pattern to continue. For me, personally, there was no clue that we were going to get hit as hard as we did to the upside late Friday afternoon. So for me, what saved me was my process of going, okay, even if I wanted to be short at that 27.3350, even if I wanted to be short at that location, I just never got the push underneath that bar and the backside test to give me entry, which saved my bacon, which is exactly the point of having a solid trade plan and the discipline to follow process repeatedly. It doesn't keep you from getting stopped. It just keeps you from getting annihilated on days like that right there, which if you've ever drawn down, that's just a painful process. So that's the ES trade review for Friday. And so I want to discuss tomorrow a couple of key areas going into the day. So number one, let's pull up the other chart so we can look on the other computer. And I need the other mouse for the other computer. There we go. So number one, the most important area on this chart for me is this point right here. Let's just call it 27.30. If we are not trading below 27.30 tomorrow morning, either before the market opens or after the market opens, I am not looking for shorts tomorrow. Okay, now let me give a caveat to that. I may scalp to the short side. I'll be very quick to take my trades, and the setups are going to have to be golden for me to take, and the shorts will be on reduced trade size. Why is that? Okay, so let me cover this really quick. I'm pretty sure I probably have some room members watching. Okay, when we are trading below a value area, it is easy to roll to the downside, right? And even if we are trading above, it doesn't mean that you can't have shorts. Clearly, you can. You can get intraday setups. You can look for failed range extension. You can look for a failure behind the 62 retrace of the day. There's all kinds of intraday clues that we have for setting up shorts. But the big short extensions come from when you're underneath the prior day's points of control, and it's hard to imagine. Value area low came in all the way at the low at 27.1250. It's just hard for me to imagine a scenario where tomorrow morning we come in, unless there's some, God forbid, terrorist attack or something crazy happens. It's just going to take a ton of energy to erase all of this and get us below 27.12. Now, don't get me wrong. If we're trading below 27.12, and in particular, I think the line in the sand is actually this 27.24 to 27.25. If we are trading underneath there, I am more than willing to put in a short and push. But I know that as long as we're above this 27.30, I don't want to push. Some key areas need to get repaired in the chart here, here, and here. And it is likely that we will have balanced price action in here as we fill this chart in. You can see how absolutely thin and choppy it was through here. It really left a scarred landmark, what I'd refer to as a scarred profile up here, and it needs to get fixed. So my guess is when we're coming through here that we end up with rotations that end up doing some version of this, where we just trade up and down and fix this part of the profile. And then depending on whether we close on wherever if you'll envision a value area, so let's say this value area shifts up here, which is very likely, right? And then the determination will really be going into Tuesday as to whether we close on Monday at the bottom of that value area, or if we close at the top. That'll probably be our first clue. I would not expect a raging bull run tomorrow for two reasons. First of all, Monday and Friday are the narrowest range days of the week relative to what we've experienced, so it could still be 20 or 30 points, right? And secondly, Mondays tend to be balanced days. It's a rule of thumb. It's not an ironclad rule, right? So I would look for balance. My guess is that we're going to do a lot of whipsaw and repairing these little areas right in here tomorrow And as the market repairs them, we'll get some back and forth. And it'll probably be a scalping day as opposed to a swing day for me. But and then I'll look for exhaustion. And I can tell you the pattern was before this week, the first test into value area high on both NQ and ES has been a go-to trade for a lot of traders. It's been total money. And I can promise you there's traders laid up near 27.30 looking to get long. And I will probably be in there with them using my smaller range bars to look for long entries to push out of here and really back to the mid, right? So let's say we open 27.50 and roll 27.30. I will look for responsive buyers in this area for a push back to the midpoint. And the same thing from this 24.25, I'll look for a push back to 30. And if we can get above 30, then back to the mid of this area again. If we fail at 30 and we've already tested 25, then I'll look for a push to the bottom of the range. But that's my least likely scenario to occur for tomorrow. Okay, so that's ES. And the other thing that of note for ES is if you look to the left here, this was our most recent swing high. It was right here, 27.54.75. And if we trade above and can consolidate above 27.54.75, there's a lot of room to the upside. But that was our high from the 16th, right? And look for people to look for a double top at that 27.54.75. We may have already hit it this evening. I don't know. But I would expect rejection the first time there as people look for a double top in that area. The problem is your value area is so far below that. You could actually tag that 27.54, make it all the way back to 27.30, and still end up breaking out tomorrow. So we'll see how that rolls. Let's go look at NQ really quick, and then we'll shut it down for the night, and I'll get some sleep before I have to get up with the twins tomorrow. Those girls always want to spend some daddy time while I'm having my coffee. So I want to make sure that I'm fresh for that, and then I can still think by the time I get to the office. So let's clean all this up. So NQ, much the same story. Let's spread this out. So the first thing you'll notice is NQ broke above the high from the 21st back at 68.86.75. That'll be a big marker. That was prior to last week's high. And if you'll look, this was our last swing high right here. We're going to mark, let's see if we mark that. We'll mark that in white. There we go. 70.32, right? That was our swing high back on the 29th before we rolled. And then before we got the roll, after the gap down, our swing high was 69.91.50. We'll make that red. That's actually really the important number in there. Not that I think we're going to necessarily check that out, but that would make more sense. What you'll notice is in between there's naked volume point of control and a TPO point of control at 69.62. And the other one is at approximately 69.51. And I will look for a reversal pattern out of that location if we switch. Now, that's an area I would look for a short from if my pattern sets up in that area. I would look for a short from that location or a failed range extension back to 69.86 or lower. Okay, so next, right, so I don't know how we're going to open tomorrow morning. So we're trading at 69.04 right now. That I do know, right? If we can't get below 68.59, there is no short. And again, that first test of that value area high, I'm probably looking to find a long location in that area. I would expect responsive buyers there, followed by that 68.41. This area is going to be a little bit wider. I'd actually say from 68.43, initially 68.43 to 68.31. And then specifically, if we get down to 68.15, also this whole area actually has some pretty attractive areas all the way down. But importantly, right, as long as we're holding above the 68.41 and the 68.59, I am looking to lean hard on my longs and hopefully get targets up to that 69.51 will be my objective tomorrow. I will change my mind if we open up below 68.59 because I'd want to see us trading above 68.59 before I set my eyes there. But what I hope is we open up at 69.05 or 69.86 and give me an opportunity to find location at 68.59 or 68.43 for a pushback out. That would be my plan for tomorrow on NQ. It looks strong. We closed above last week's high, setting a new high for the week. There was a lot of bears really trying to break this thing down and get a retest of the swing low, and they couldn't even push into the body of this area. I mean, NQ really looks strong here. I would not I'm not bearish, and I'm certainly not bearish until we get below this value area. I just don't have a bearish bone in me at this point. I'd rather be long on all my trades. So anyways, that's how you put the pieces together. I know I droned on there for a little bit. You have to put all the pieces together. You have to understand what you're looking for from a profile standpoint, and then you have to be able to dial that down to a 5-minute or smaller time frame to perfect your entries and exits. So anyways, my name is Simon. I'm with toughtrader.com. If this sounded a little boring, right, realize when you get good at things that are technical, when you get to the nitty gritty, they become boring, right? You're talking about highly detailed pieces of information, and you're really trying to get the, all the I's dotted and the T's crossed so you get your trade set up correctly. If you'd like to visit us in the room, the email now is tradertough.com@gmail.com. Excuse me. It's tradertough@gmail.com. So TraderTough, tradertough@gmail.com. If you'd like to come visit us, send me an email, include your Twitter handle, or if you have one, and we will get you set up with a private Twitter feed and into the morning meetings. If you like this meeting, if you could please hit the like button, really, really appreciate it. And I hope everyone had a great weekend, and let's go kill it this week. It should be a great trading week. Talk to you later, guys.